Welcome back. Markets are looking to rebound this morning. We got a pretty good triple-digit bounce this morning after a massive meltdown yesterday. U.S.-China trade tensions are flaring up. The U.S. is accusing China of currency manipulation, and the president did that late yesterday. The S&P, the Dow, and the Nasdaq all took a dramatic tumble yesterday. Joining us right now is Potomac Wealth Advisors president and founder Mark Avallone. Mark, it's good to see you on a day that markets are struggling to come back from that huge sell-off yesterday. What would you do today? Coming in after that 800-point sell-off yesterday, what are you advising clients?
Well, I think it's a wait and see. First of all, if you're in the markets, I don't think you panic and sell out because we had some rough headlines. And if you're not in the market, I think you're going to continue to see volatility. So there's no reason to dive right in. Look, we've had an ongoing spat with China. It's going to continue that way. It may continue for a decade. I think this is just a continuation of China flexing its muscles and showing the U.S. it doesn't want a public beatdown, either with tariffs or tweets or messages. And I think we as investors have to understand this is going to be a slow process that is going to unwind, and volatility is the new norm.
Yeah. Do you want to sell the things that are going to get particularly hard hit from the tariffs? Because I know that this latest tariff threat is impacting the consumer sector pretty hard. You've got things like cell phones, laptops, flat screen TVs, set-top boxes, routers, apparel, footwear, toys, all in the category of getting hit by that 10% tariff on the $300 billion of goods coming from China.
Well, if the U.S. consumer stops purchasing, to some extent, that's going to happen. Keep in mind the weaker Chinese currency is going to also minimize the impact of those tariffs somewhat. And I think retailers are already feeling the pinch. They're trying to absorb some of this. The good news is that the U.S. consumer is flush with cash, still buying, still spending. I don't think it's going to be a one-for-one. If tariffs do take effect, we're going to see a massive impact. I think there are several mitigants that the economy will be allowed to be absorbed into it, and hence into some stock prices.
There is, Deirdre here, there is some headlines saying that China is trying to keep the yuan from devaluing further. If that is in fact true, so we have that they might sell about 30 billion yuan in Hong Kong mid-August, will that matter to our markets?
Well, I think stability is what we're looking at, and a ratcheting down of tension. So if they do take steps like that, that'll be a big reassurance. I think the unknown is what drove yesterday. If they're going to devalue their currency one step, will they go 2 steps, 3 steps? So if they pull that back and look like they're playing ball with the U.S. and the global economic community, that's a net positive. So, yeah, any step by them in that direction would be welcome to reduce these fears and jitters.
No, go ahead. No, you go ahead. What's going to be the impact on investing? Are businesses going to overcome the reluctance, even though they don't know the rules of the game? And how's that going to affect the economy in 2020 and 2021?
Well, you all have been talking about that on the panel for some time now, and it's this lack of foresight, the lack of ability to plan, the lack of being able to make meaningful capital expenditures. And it's really a shame because in light of these tax cuts were a terrific boost for business, the hesitancy remains because of the lack of clarity.
Yeah.
If we can get, and this is why I heard earlier, I think Maria said, if we can get an elegant deal, even if it's on the smaller side, it creates more certainty for the business community just to take the heat off, get something in place so businesses can continue. That would be a huge boost, Steve.
Yeah, I mean, what was it down, 6 or 8% in the last reading on business capex?
Yeah, it was
spending
0.8%.
0.8% taken.
Yeah, seasonally adjusted in the second quarter. But Mark, one thing I wanted to ask is that in this environment, because companies flush with cash could actually benefit from these tariffs in a sense of, say, Apple could take market share in this environment if goods made in China, say other phones that are imported into the U.S., Samsung, phones made in China, they could be, Apple could take market share in this kind of, with this backdrop. And all the other companies that are flush with cash that could eat these tariffs in the short run. Are those the stocks you want to look at?
Well, they could do that. What concerns me about Apple is the buy China rhetoric that we're starting to hear, and that could be an offset to any benefit that you're outlining. Sure, Apple, world-class leader, super strong balance sheet. They can choose to absorb some of this. I am more concerned, though, that they could lose access to one of the world's biggest markets, and that's a bigger concern for me in the trade fight with Apple, more of a threat than an opportunity.
Let me ask you about this op-ed on the Fed defending the Federal Reserve. Former Fed Chairman Paul Volcker, Alan Greenspan, Ben Bernanke, and Janet Yellen all got together. They wrote an op-ed in the Journal this morning advocating for the independent central bank, for the independence of the central bank, titled "America Needs an Independent Fed." They write, even the perception that monetary policy decisions are politically motivated or influenced by threats that policymakers won't be able to serve out their terms of office can undermine public confidence that the central bank is acting in the best interest of the economy. That can lead to unstable financial markets and worst economic outcomes. Interesting that they all got together with this op-ed this morning.
Right, but I don't think there's any indication that Jay Powell is reacting to President Trump just yet. We do wish the president would tone it down. I think it does create the perception, and I think that's the issue. I don't think the Fed chair has been reacting, and I don't think they're going to. And in fact, there could be the counter effect that they want to dig in their heels and fight for and show their independence. Interesting that they all came out and wrote that. I don't think it's happening just yet.
All right. We will leave it there. Mark, it's great to have you this morning. Thanks so much.
Good to be here.
Mark Avallone joining us.